Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome back into Phil's Tax Hacks and Other Retirement Facts. Back for part 2 of our conversation about different kinds of personality types you might find in financial advisors. So we kind of had what we're calling this, the personalities of rogue advisors, spotting problematic personalities. And again, maybe it's only a problem if it's not what you're looking for, right? So it could be the right fit for you. Maybe it is. Maybe
it isn't, some of them are a problem. I mean,
some of them are problems
looking for them, but I mean, other ones are more personalities. So
for sure,
it's good fun discussions. So.
Yeah, exactly. So we're gonna get back into it with Phil and have and finish up the other. I think we got 4 or 5 more we're gonna go through. So if you didn't catch the last podcast, you don't have to watch one to watch the other, or listen to one to listen to the other. But go check it out. It was last week, and of course you can find us on Apple, Google, Spotify, YouTube under Phil's Tax Hacks. That's .com is the website, but under Phil's Tax Hacks, if you search that out in the search box on the different apps. So what's going on this week? You doing all right?
Doing really good. Wrapping summer up. So
you got the camper
last camping trip in, and
last one on. Okay. All right. You
for a while.
Yeah.
Well, we've got a couple more towards the fall, but.
Oh, okay. Yeah. So I guess probably till maybe October.
Yeah, we have to have it back in storage mid-October.
Okay, yeah, so. That makes sense.
Yep.
Well, let's get back into our list here. We'll go through a few more of these because we're going to start with. I was trying to find the little cartoon you and I were chatting before about this, but the Armageddon Prophet is our next one. And I saw this little meme once. It was pretty funny. I couldn't find it, but it was basically like the kind of advisor where every time there's a bump in the market, it's the end of the world kind of thing. And the meme was an airplane full of people and the captain saying, we're experiencing minor turbulence. And the guy in the chair is going, we're going to die. We're going to crash. We're going to die. And the person next to him is like, he must be a financial advisor. Right. So it's one of those things where there is a tendency in this industry to have that kind of personality type where every time there's a little bump in the road, it's you better get out or you better do this or that because the market's gonna collapse or whatever. And is that maybe more about product pushing than it is about planning?
Yeah, I mean that, or to me it's more about selling, right? I mean, because we all buy emotionally. I mean, we know that. One of the greatest emotions is fear. Sure. So unfortunately, a lot of advisors will try to capitalize on that.
Okay. Yeah.
And sell by fear.
Yeah.
Say, well, the market crashes. What's that going to do? And, you got to have this or, whatever else kind of product fits what they're trying to sell.
Yeah.
And there are risks in retirement. Absolutely. And you don't want to whitewash them. If your advisor is not talking to you about risks, then maybe that's not the right advisor either. If they're every day's a great day. Oh, don't worry about it. Everything's going to be fine.
It's all a commercial, right? It's all a Sandy Beach commercial for retirement.
If they're only telling you about here's that, that sailboat out in the ocean with that nice looking couple on it all the time, or, the sitting on those Adirondack chairs looking out at the water. I mean, that can be great, but it doesn't always happen like that. So you have to have a blend between them, have the discussion. But if that's where they're leading, if you go to a seminar and that's all they talk about is the doom and the gloom.
Good point. Radio shows can be that way. I host some radio shows as well throughout the area and, try to keep them or around the country, I should say. And we try to keep them fairly balanced. But sometimes it is easy to walk down that path of, well, here's what happened, in 07, 08, 09, blah, blah, blah. And we've talked about these things before too, but we try not to make it's part of it. Right. But if it's always the sky is falling, the Chicken Little mentality, then that might not be a good fit.
If that's their primary focus, right. If that's where they start the discussion, to me, that's a concern.
Okay.
I mean, again, everyone's got their own philosophy and process. My process is, I say, plan for the best, prepare for the worst, right? So let's plan it out. Let's make sure this retirement works. And then let's stress test it because there are risks. What happens if market volatility happens? What happens if either of you passes early? What happens if one of you needs long-term care? Hey, these are realities. It does happen. And you want to know what that looks like in your scenario. Do you need to help hedge and cover those? But if they start with, the market's crashing and that's all they talk about, then what are they selling?
Yeah. Yeah. Principal protection is important, but you want to also, make sure that you're just, again, you're not being kind of doom and gloom. It's almost kind of I think it's almost kind of the same feeling as the ambulance chaser, right? And don't, if you're a lawyer, don't send me a hate email. That's just a term, right? And so, but it does apply to a specific personality type in the legal field where they're just kind of looking for that specific thing. That's where they make their money. Fine. And if that's what you need, fine. But same thing in the financial services industry. You probably don't need that specifically. You need someone who's really holistic across the board versus just the one size thing or the one-sided thing. Okay. Yeah. How about the avoider? This is our next personality type. I think this is more of the, let me ask you a question and you don't get an answer. You get kind of the sidestep, the sidestep all the time. The Texas two-step,
Yeah.
A lot of ladies actually feel like they run into this often when going to see a financial professional because there's been that gap for a while and it's getting better all the time. We've talked about that and done podcasts on that before, but maybe they'll ask a question and they feel like they get avoided and they kind of focus on the husband or whatever. And it's like, that's the same kind of idea where they don't really answer people's questions, whether it's the husband or the wife.
I try to be conscious of this because whenever I'm explaining something or a question like that comes up, I try to end that with, does that make sense? Or do you have any other questions? Just to make sure we're on the same page.
Right.
Because as an advisor, a lot of times when I give what I think is a good explanation and try to bring it down to a reasonable level of, terms and something that you might understand, maybe you still didn't understand. So we need to approach it a different way.
Sure.
But so, I mean, if this is your scenario, just have that discussion back and forth. Don't let the advisor avoid it. Maybe they think they've answered it, but they really didn't. Let them know.
Yeah.
But I mean, if they are truly kind of sidestepping and never addressing that, well, then it's a concern because it's a question you had. It's still not answered. That's a problem.
Yeah. We've gotten emails before like, hey, I'm working with an advisor and they do a really great job talking to me about this, this, and this. But every time I bring up Social Security, we never get around to finishing the conversation. Right. So it could seem innocuous to the advisor, but to you, it's becoming a bigger problem because, hey, I really need to know what my Social Security strategy is. And they may not be very good at that. So that's why they're avoiding it. Right.
Well, and again, kind of back to some of our original discussion, maybe this is,
a one-trick pony.
That's not what they do. You expected them to be quote unquote an advisor, right?
Yeah. Yeah.
And they're really a broker.
Yeah.
So they sell financial products and they may have helped you kind of run some numbers to see which one fits, but they've never really looked at the big picture. So they're not a planner.
And if you get kind of that, well, no, I can get to it kind of thing. Well, then they're trying to maybe just keep your business versus really truly being the right fit for you. And there's not, and let's say this too, Phil, going through this list for the last 2 weeks, just kind of having some fun with some of these. There are certainly, people out there like this. In every industry, there's people out there that maybe don't do the best things that they should be doing. But I think most advisors do try to do a good job for their clients. I mean, I think every industry is full of people trying to do the right thing, but those occasional bad apples do happen no matter what walk of life it's in. We know that. So
and sometimes it's not even a bad apple. It's just a misunderstanding of what people do. I mean, maybe somebody is truly just a broker or just an insurance agent.
Yeah.
But maybe how they represented themselves, or you thought they were something more than really what they did. Yeah, I mean, you have to understand that relationship and what they are.
Yeah, that's fair. I think that's definitely very fair.
You go to your heart doctor and you start talking about your ear. He's going to say, "What do you?"
He gets
has nothing to do with it.
Yeah, we
maybe
talked about.
I don't know.
We talked about my doctor last week actually when we were talking about this, and he gets so mad at me, and it was funny because I was like, "Well, I've been having a lot of pain in my hands and my arms," and he's like, "Well, then go see." And I'm like, "Well, wait a minute."
Doesn't this have something to do? Yeah.
I was like, I said, I'm bringing this up because I saw this thing from the Mayo Clinic that said there's a particular kind of heart disease that actually can cause pain. And so I had to kind of walk him down this thing for a second because obviously they're just going like this from person to person to person. Yeah, so I had to kind of I had to refocus him a little bit. And then he's like, "Oh, that's a great point. I hadn't considered that." Right. So I'm like, There you
go. Yeah.
There you go. So, I mean, conversation can be, and that's one of the reasons that I'm working with this particular. I switched cardiologist after I had my heart incident a couple of years ago because I didn't feel like the guy was truly getting me, right? And it's the same thing with the financial advisor.
Yes.
If you don't feel like they're getting you and you're getting each other, this guy I can argue with. Like this guy I use now, like he'll tick me off and I'll tick him off, but then it gets us going in the right way. So I think that it works,
so,
right?
Yeah.
So you just got to walk that path, right?
Yep,
all right, so let's go to our next one here. The Fee-First Scoundrel. And this might just be I can help you and it's going to cost X, right? And there's nothing wrong with just being told it's going to cost X for a plan or whatever. But this kind of might go back to that ghosting thing too, where it's like, okay, let me just get some money for a transaction and then bye.
Yeah. And again, I think this is looking for the right fit, right? I mean, because a lot of times financial advisors give a plan for free. Personal opinion. Okay, let's get that out right now. Personally, I don't think they can give a proper plan for free. Because to do a proper plan, there should be a lot of work involved.
Mm-hmm.
You know, and I always say, I mean, if at the end of the day, your plan points to a product, you have to ask yourself, is it a plan or is it simply a product positioning, a sale?
The initial consultations many advisors offer, Phil, is free, right? But it's
absolutely.
I think it's to get started.
It's not a complete plan.
It's not a complete plan, right? It's to kind of see, are we the right fit? And then they're going to talk about, okay, then you need to find out, how do they get paid? Is it assets under management? Is it commission based? Right. Is it, one-time fee when the whole thing's done? Whatever the case is, because I mean, nobody's working for free. We know that, right? Absolutely. So you have to kind of go in this a little bit eyes wide open. Every advisor I know offers the complimentary review process for free. But then it's like, let's see, okay, you're not a good fit or I'm not a good fit kind of thing. And then we move forward.
Yeah, and that's our process. I mean, our first meeting, maybe even two, sometimes it goes into a couple of meetings, are complimentary, but we're not going to develop a plan for you because that takes several meetings and a lot of work on our side on the back end to do a proper plan. But in those meetings, I mean, we can give you a high level kind of napkin sketch, right? I mean, I've done this enough that I know what things look like, right? I know, okay, when you have this blend of assets between taxable, tax deferred, and tax free, if everything's in the tax deferred bucket and you've got a pension and high Social Security, you probably are going to have a problem tax wise long term, right? Just you've got to run the math. And I mean, I can kind of ballpark this out and show you what that looks like. And that's really the purpose of that first couple of meetings, is to know the client, understand the relationship, show that, we have some value and this is how I think we can help. And here's some concerns I have looking at your scenario. Not a plan by any means. Yeah. But these are some things to consider and what would be addressed in a plan. Then the next step is if you want us to help, there's going to be a fee for the plan. It's like a blueprint. You go to an architect, those first couple of meetings, you're going to kind of discuss what you're trying to do, maybe sketch out a couple of things, get an idea. Can they do it? Do they think it's going to work? But if you want them to develop the plan that you can now build this house, they're not going to do that for free.
Right.
So,
yeah. And I think that's a great way of looking at that, So again, it's like trying to evaluate the situation. And you've been doing this 30 plus years. I imagine many advisors who have got a long history in the business, somebody can walk in and realistically within the first two meetings, you probably could identify exactly what this person needs to do. But you're not doing them the proper service if you did that, right? Like you can kind of get a framework in your mind and you can kind of look through and go, okay, I've seen this about 40,000 times, so I know where we're going to go. However, they're getting a customized plan. So I'm going to do the diligence and work through all those problems once they decide to become a client and get all those details truly, dialed in. But you've seen it enough that you can make a pretty good estimated guess right off the bat. But that's not going to be your recommendation because you haven't built a plan.
I mean, so great example. When we're going through that scenario with a client, I mean, I can look at that and say, look, I can tell you from this, Roth conversions are going to help, right? Because you have a huge tax problem coming up when RMDs hit whatever required minimum distributions hit. So this is what that might look like, and we can rough some numbers in. But during that meeting, I'm not going to be able to tell you this is how much you need to convert over what period of time and what the plan. I don't know. I mean, that takes math. You got to run a lot of math and figure out the numbers to see what really makes sense. But I can tell you, yes, at the end of the day, I think based on what I've seen that it's going to help. And this is why.
Yeah, that makes sense. Yeah. And again, that comes with experience, which you're probably looking for, right? There's some industries where I think experience we certainly want. And this is one of those, right? We were talking about before we had the downturn in 22 that, basically there was a 12, 13 year run where there were advisors in the industry who could say, I mean, there's nothing wrong. Hey, I've been in business 12 years. That's great. That's a nice long business. But I haven't seen a significant downturn.
Yeah.
I've never had to plan through the bad, right?
It's been great. Yeah.
Yeah. You never had to plan through the tough stuff. All right, let's just see if we can squeeze in at least one more here. The tortoise. So this might be the type of advisor. Okay. It could be someone in a situation like yourself who's been doing this for 30 years. Right. And you get kind of set in your ways and you never really it's the same strategy year after year, person after person. There are advisors out there that are like that. They feel that they've done it well. They know what works and they're sticking with it. It almost kind of the same thing as the big box where it's the cookie cutter plan where one size fits all for everybody. But maybe even in a boutique firm, this is that person that's kind of like, this works. I've done it for 20 years. I know that it works. And that's what we're doing, regardless of the situation. And that might not be the right fit.
I mean, there is going to be commonalities, right? I mean, and that is in our scenario the case. There's a lot of commonalities because we work with a certain niche of clients,
right,
that have commonalities,
right?
That I know we can help because of this situation.
Sure.
So there is going to be commonalities, but not everyone's plan is going to be exactly the same. So it's never a cookie cutter.
Mm-hmm.
I don't pull out, well, you're going to be plan, number 2 because no, I mean, this is things we're looking at, but your situation is going to be different than the next client than the previous 10. They all have very similar moving pieces.
And I don't see you being the kind of person that doesn't also try to learn and grow new ideas and stuff. I know you're you try to stay on the leading edge of whatever it is that you're doing, right? Mm-hmm. So it's kind of like, I think maybe where I'm going with that is that person who doesn't really want to keep up with whatever new technology or new trends or whatever, because they're like, well, new trends don't work, and they may not work, but there's something you got to be like, at least I would think in this industry, you're always learning. You should be anyway.
Absolutely. It's always changing. You have to keep up. It's like technology. You have to keep up with it or you're going to be left behind. I mean, crypto is one of those things right now, right? Everyone's saying, oh, crypto, what is that? I'm not going to deal with that. And I mean, we're not dealing with it with clients yet, but I am very involved. I understand how it works. I've got a manager we're starting to vet and understand and see how it might fit.
Right.
Is it appropriate today? Maybe not. It depends on the client risk. In 5 or 10 years, I think it's going to be something a lot of people are looking at because unfortunately, depending on how you want to look at it, this is how the world's moving, right? It's
think about
towards the blockchain and but that's everything shifts. That's just how it works.
Well, think about the other side of your practice, which is you're a CPA as well as a financial specialist, right? Financial professional. So taxes constantly. I mean, we go through tax codes that may sit for a number of years, like the ones we're currently under, right? But there's still they make little changes like almost yearly.
Yeah, we've gone through the Secure Act and how many times they've changed that. And it's, number 2 with 100 changes plus. I mean, you go back to one of the podcasts, we went through all that. So it's always changing. So you always have to be up to date.
Yeah.
If they're just coming in and doing exactly the same thing they've done for the last 10 years and not really keeping up with what's going on, it might be a concern.
Yeah. Yeah. And we'll quickly throw in a bonus one here. And this is the Chameleon. And this is really maybe the opposite of the tortoise. This is,
I was going to say, it sounds like,
it's just the trend, right? Well, this is the trend. So let me just jump right on it. They don't really kind of have a strategy. It's just like throw pasta at the wall and see what sticks.
Yeah. Or to me, I mean, this is more the broker type. Again, not to pigeonhole people, but I mean, I got the latest great company. You already buy this, and I mean,
the Wolf of Wall Street kind
the
of
Wolf of Wall Street type of thing.
Yeah, right? The penny stock kind of thing.
Whatever. So I mean, if every time you talk to them, it's a different story, or a different product. Oh, you got to buy these. This is great. I've heard, whatever. Then you maybe should start to question. I mean, they're maybe a little bit on the leading edge too far.
Right. And that might not be what you're looking for if you're retired, getting close to retirement. If you're if you're 25 or 30 and you want to be on the and usually the leading edge is the bleeding edge, right?
Right.
If you want to be on that because you're young and you've got time and you want to take chances, that might be totally fine for you. But if you're 52 or 55 or whatever, maybe not, right?
Yeah. I mean, you have to keep up with technology and changes and things as it moves, but yet you don't want to be right at the edge of it. And, because to your point, that's where it really works good or really bad, and you can't afford a really bad scenario.
No. Cut your nose off, right? Yeah, despite your face kind of thing. Yep. So, all right, well, there you go. So that's our podcast last couple of weeks here, going through some interesting personality types. We did this for clients a while back, different kinds of, potential personality types that we have as potential clients, but there's also personality types for advisors as well. And so everybody's going to have who they are. There's some quirks about themselves or their industry or their practice. Just make sure it's the right fit for you, whatever it is that you're doing. These are some ideas that's the key. These are some ideas just to kind of be on have your radar up in case you're shopping, to make sure that you're finding the right fit for yourself. And if you need some help, reach out to Phil. As always, you can contact him by stopping by his website, philstaxhacks.com. And don't forget to subscribe to us on Apple, Google, Spotify, or YouTube. You can hit the subscribe button on the YouTube there, or you can stop by philstaxhacks.com, find it all there, or call him 248-888-7530. Phil, thanks for hanging out, buddy. Have yourself a great week. I'll see you in August.
Sounds great. We'll see you.
Actually, no, it is already August, this one. Yeah, so I'll see you.
Yeah, well, that's right. It is.
So more August.
Towards the end of August, yeah.
That's right. So I'll catch you next time here on Phil's Tax Hacks and Other Retirement Facts with Phil Putt.
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.